Alix Steele. Welcome to Bloomberg Commodities Edge, where we focus on the companies, the physical assets, and the trading with the hottest commodities and the smartest voices in the business. Let's get right to that data dig, where we look at the top market stories of the week. So first up is that reopening trade. So catch up. Global LNG imports, they actually jumped the most in a year in March. That's on restocking in Europe. Plus, you got China's new pipeline operators going to open terminals to gas distributors. What's also interesting is this lower portion. A huge portion of those imports actually come from the U.S., that orange line, about 30%. Let's stay in the U.S. for a second. Take a look at President Biden's tax plan. It wants to eliminate subsidies for oil and gas companies and raise taxes on polluters. Here's a list of the companies that might be hardest hit. This is the estimated benefit from fossil fuel subsidies on U.S. production in 2018. The idea is you go ahead with your drilling costs early in a project's life cycle, but then you carry forward losses for several years, and that helps you financially. EQT and Exxon, as of 2018, would have been the most exposed. And next up, Citi is really bullish on copper, and it's digging in its heels on that call. They see a once-in-nearly-20-year opportunity for major refined copper inventory draws over the next 6 months. That creates the biggest call on copper scrap in copper's history. This is their estimate out past 2021. This will put prices anywhere between $8,000 a ton and about $12,000 a ton over the next few years. All right, now let's get into the ring with the latest on Iran. The U.S. and Iran actually kicked off informal talks this week, and they're going to meet again tomorrow. White House press secretary says this will be a long process.
We expect that, as I conveyed yesterday, that a big part of the conversation will be how Iran can come back into compliance and what would be required of the United States. But we've been clear that we are not anticipating any steps at this moment. We'll allow the negotiations to continue.
Both countries are jockeying for leverage while the clock now counts down to Iran's presidential election in June. Bloomberg's team leader for national security, Bill Ferries, is with us from Washington. Hey, Bill, what's the state of play here?
Well, thanks, Alex. We had those talks earlier this week in Vienna. We didn't have direct talks. The U.S. and Iranian negotiators didn't meet with each other, but they met with the intermediaries, sometimes China, sometimes Russia, other times UK or France. There was no big breakthrough, and as the White House press secretary there indicated, the U.S. is at least setting a very, very low bar in terms of expectations for a breakthrough. But there are reasons to think that perhaps something will happen in the coming months. Just having the two sides together talking is a good start. And there are a lot of reasons, deadlines with IAEA inspectors, for instance, that are raising the hopes that a deal, some sort of a deal or a framework maybe, could be reached by the end of May.
Talk to me about the Iranian presidential election and how that plays into this conversation.
Sure. Well, you have the current government, which by, I guess, Iranian standards is seen as somewhat more moderate than its opponents heading into the June election. The current government would like to see some sort of a victory, some sort of a conclusion to this, because they're the ones who negotiated the original deal that was reached in 2015 when Barack Obama was president. They would like to have a win coming out of this, but they're also very sensitive to the idea that they are giving anything away at this point. After 3 years of punishing sanctions, they would like to see the U.S. take the initial steps. The U.S., of course, is in its own bind. Republicans and Democrats in Congress largely opposed the 2015 deal that Obama made. And there's a lot of skepticism about whether Iran can be trusted with any new agreement.
Especially because oil is already being smuggled out to China, for example. All right, Bill, thanks a lot. Bloomberg's Bill Ferries. Time now for Commodity and Cheap, where we talk to one executive in the commodity world. And today, it's Blake WALTRIP, the U.S. CEO of A2 Milk. Here's a look at the company. Got milk? Because A2 Milk wants you to. Here's the deal. Milk is made up of solids and water. Now, the solids are lactose, fat, minerals, and protein. Now, whey and casein are the two proteins in milk. Casein makes up 80% of the milk protein and breaks down into three types: alpha, beta, and kappa. Now, there are two types of the beta casein protein, A1 and A2. Now, most milk you buy actually has both, and that can actually cause some tummy aches. New Zealand's A2 milk only says A2 milk protein. Now, Australia and New Zealand make up the bulk of the company's revenue, over $610 million, followed by China, which has been a huge source of growth for the company. Typically, Chinese shoppers buy their products in Australia and New Zealand, then resell it to China. Now, the business has struggled with COVID-era travel restrictions, as well as mothers turning to homegrown baby formula instead. A2 is pushing very hard into the direct e-commerce sales, but that comes at the expense of margins. And then there's the U.S., which comes in a distant third, with just over $42 million in revenue in 2020 and negative margins. Now, during COVID, the company opted for a more affordable premium pricing mechanism and is now in over 22,000 stores across the country. I recently caught up with the CEO of A2 Milk USA, Blake WALTRIP, and asked how he's going to scale up that business.
We've brought a lot of consumers into the A2 Milk franchise as this has happened, and we've continued to build our loyalty and our awareness levels. So we think that over time, we're going to continue to see more and more people buy into the franchise. The U.S. milk consumption is unlike a lot of places around the world in that it's a repertoire purchasing category. So U.S. consumers have on average about 3 to 4 different milks and milk alternatives in the refrigerator at any one time. So if you're a brand, the key is to be part of that repertoire of purchase.
To do that, you've also been expanding a bit, like a new coffee creamer, for example. So I'm wondering, in how many other tentacles do you have out for new types of products?
The key for us is we've spent a lot of money developing awareness of the A2 protein. 5 years ago, nobody had ever heard of A2 milk in the U.S. Fast forward today, we've built up significant awareness. And in many respects, that was the best way to start in a new market, was to come in, develop awareness with a category that has 90+% household penetration, high frequency of consumption, and now we can capitalize on that awareness in multiple categories. Now, the A2 Milk Company is a dairy nutrition company, is not one that you'd necessarily see us go into a lot of traditional dairy adjacencies. You'll see us looking at a lot of dairy nutritional opportunities that leverage the benefit structure of this natural A2 protein.
Give me some examples. What does that mean? What are some examples?
There are categories that you can think about when you think about the A2 protein that it could play quite well in from a dairy nutrition standpoint. One might be protein in various formats. For example, I mean, the A2 protein delivers a strong consumer benefit. It has an easier on digestive benefit proposition to it. There's a good example.
How many stores are you guys in now, and what are some of the benchmark goals that you're looking at?
Right now, we're in, as we've recently come out in our announcements, we're in over 22,000 doors. 5 years ago, we started as a test market in California. Now we're national. We're across every major channel of distribution. We have seen, as many different companies have, we've seen online sales also start to build this year as many consumers are purchasing products online. Refrigerated products are a little bit more difficult through that channel of trade. But overall, we see there is white space in distribution, but it's not dramatic white space in order to build to the scale that we're looking to build to on the business. But yet there's still upside potential.
How much more? Like, what do you look like in 6 months or 8 months or 12 months?
You know, I think you'll continue to see us build our presence. It's mostly about building in the independent channel of trade. It's about building our proposition and taking us out nationally with a few of the major retailers we're with. Those are opportunities. There's a few thousand more doors to get into, but broadly speaking, at 22,000 plus doors, we're in a very solid position once you drive your velocity to get up to scale.
The margins over in your Asian business and Australia, New Zealand business are so much better than here in the U.S. And I'm wondering, like, obviously, because you're building it out. So when do you think you get to the point where the margins start to improve? What's the forecast for that?
We haven't set a specific time frame for when we're looking to be profitable in the U.S. But what we have said is our next goal is to hit a scale of 100 million plus in revenue. Revenue and scale is very important in a fluid milk business, for example, in terms of ultimately improving your margins. Freight rates and otherwise with liquid refrigerated products is certainly an expensive proposition, and so scale helps a lot with that.
That was my interview with Blake WALTRIP of A2 Milk. Now from got milk to where's the beef? Tyson Food wants to know, like, seriously. The meat giant realized late last year that more than 200,000 of its cattle seem to have gone missing on a Washington state ranch. So what happened to the bovine ghosts? They never existed to begin with. Tyson paid the Easter Day Ranch millions of dollars for purchasing and fattening up cattle. But beginning in 2010, ranch owner Cody Easterday decided to seize the movement, and instead of raising cows, he traded and lost big in corn and cattle futures. The legendary failure of his losses are said to total over $200 million. In the meantime, Easterday continued to send Tyson bogus invoices for the never-purchased animals. And as for his trading days, Easterday is being put out to pasture, facing up to 20 years in prison. That does it for Bloomberg Commodities Edge. Make sure to catch me every Thursday at 1 p.m. New York, 6 p.m. in London. This is Bloomberg.